Hey everyone, welcome back to our USA Gold video brief. Sorry for the brief hiatus there, but I was very fortunate to welcome my first daughter into the world a few weeks back, so best explanation I can give. But we decided to come back today, and we've got a lot to talk about. Last week was a pretty interesting week in the gold market. Basically, the new Treasury Secretary Geithner, or new Treasury Secretary-elect Geithner, came out and called China currency manipulators. And the quick response in the gold market was $50 higher. So, and we're still seeing some follow through on that rally today. So that's what we're going to talk about with you today. Pete, get us rolling.
Well, we did see a very nice rally in the dollar or in the gold market late last week. We're seeing upside follow through today as well. So I was kind of thinking initially on Friday that we might see a little bit of a pullback given how far we had gone late last week, but we closed it very firm. Upside follow through today, I think, is really encouraging for the gold market.
I agree with you completely, and yeah, and I kind of thought the same thing. But so really, what comes from this is this talk of currency manipulators, and China quickly responded to us and said, "No, no, no, you're the manipulators."
Right.
And it's kind of this war of words and this battle, and you know, we just got done talking about it a little bit more, and kind of how this whole battle is going to play out, and you know, what are the net effects of what we're getting ourselves into here.
Right. Well, I think understandably, you know, Mr. Geithner is trying to make a stand to protect our export markets right off the bat. At the same time, China is faced with a very similar situation and probably even more dire. They really need to maintain their level of export because they have a huge employment issue there. They need to create millions of new jobs in the cities every year to take care of their population. Basically,
right.
The last thing that they need is a bunch of unemployed men in the cities with nothing to do. That raises the risk of social unrest rather substantially, and that is the last thing the Chinese government wants.
Absolutely, and that's, I mean, a great risk as economies move down. I mean, that's something that you saw in Iceland recently with, you know, economic failure there. They're starting to experience unrest. I think, in general, when people are faced with, well, loss of quality of life, let's say, that you know, it's going to be interesting to see what they do.
Yeah, that's very true. I would say that the stakes are far higher in China than they are in the United States. Not to diminish the likely impact of a protracted recession and possibly even a depression in either country. But certainly the stakes are higher in China, and that's why it doesn't come as any surprise that the Chinese have kind of ratcheted the rhetoric higher as a result of Mr. Geithner's statement.
Well, and it's, you know, what I see from it is just a lot of finger pointing of who's going to be the one to step up their game and get to the next point of moving their currency, well, of whether or not the dollar is able to move down and the yuan to head higher. But what's so interesting is what's going to happen in the United States if either end is gained.
Right, right. The reality is something needs to happen in the currency market. Either in the mind of the United States anyways, either the dollar needs to be devalued or the yuan needs to be revalued. And how that all shakes out ultimately is kind of irrelevant. I mean, you can argue all day long about who's finally going to break under the pressure and make a move in their currency, but the reality is either way it's inflationary for the United States. If the dollar devalues, certainly that is a huge inflationary impact across the wide spectrum of goods and services. If the yuan revalues higher, that raises the price of goods imported from China. Consequently, we have inflation that way either.
Yeah.
And I think that's exactly what the gold market was reacting to when we saw a $50 rally last week, upside extension this week. The game seems to be changing to a large degree. The rhetoric is ratcheting higher. You know, the fact that we saw an actual government collapse this week as a result of the financial crisis, the stakes are extremely high.
Absolutely. And I mean, what I find so interesting from this whole currency situation is that I don't think there's really a winner in this. You know, and on the other hand, if we manage to devalue our currency, what do we really gain? I mean, theoretically, that whole idea is predicated on this idea that we're going to have industrial output that is therefore going to be more attractive to the world, and we're going to therefore increase our exports. That's the whole great benefit of devaluing the currency. Even if we get an inflation sidebar, it doesn't really matter so much if we have the growth. Well, how are we really going to attain that growth if we don't really make anything?
If we don't, yeah, certainly
export?
it's very unlikely that China suddenly starts importing GM cars. That's simply not going to happen. Another thing to kind of think about in terms of the implications of this, what is currently a war of words, is the big trump card that China holds currently is that they are the major buyer of our treasuries. So if the things continue to ratchet higher and China pulls that trump card and says, look, we're not going to buy your treasuries anymore, or worse yet, we're going to start selling the treasuries that we have. That is a very bad scenario for the United States. It's a very bad scenario for the dollar, and that would drive gold values rather substantially higher, in my opinion. And the reality is that given the current economic crisis and faced with the likelihood of trillion-dollar deficits for years to come, we can't afford Asia and the rest of the world, but Asia in particular, not to be buying our treasuries. We've painted ourselves into a corner, essentially.
Well, and that's how we've maintained a lower, or at least a stabilized value of our currency with all of this debt that we're creating, is the buying of those treasuries. And without that, I mean, the only option is for the Fed to buy them themselves.
And I just said that the last thing was the worst case scenario. The worst case scenario is truly monetization of our own debt.
Absolutely.
If the Fed starts printing money and uses that money to buy our own treasuries, that's just a horrible circumstance.
Yeah, and with the creation of all of this money, all of these bailouts and everything, you start to wonder, and this is why the Chinese officials said, well, we're the ones that are actually manipulating our currencies, because they see us and creating all of this money to essentially deal with these problems, and they're basically saying, you're the reserve currency of the world, your job is to maintain faith and value in your currency, and what you're doing is undermining that faith.
Absolutely correct, yeah. It's certainly been an interesting turn of events over the last week, and not surprising, I think, to see gold firm up rather substantially.
Well, and absolutely, and it's really based on this idea that we are on a fiat money system across the whole globe, and it's the stewards of these currencies are relied upon to maintain the faith and value of those currencies. And so you, as an investor, if you choose to buy those currencies, or even as a foreign government, you're relying, on the same exact things, and it becomes difficult or unreliable,
right,
to put your faith in those types of things. And that's really where gold comes in, and that's really why I think gold has been doing so well of late, and why it will probably continue to do so.
Yeah, absolutely. Gold is like the one currency that is kind of divorced from that whole fiat money system.
Completely agree. As a new part of a segment, and the last thing that we'll do here is we're going to be accepting questions from you as our clients or as our viewers. And so if you have something that you'd like to see us discuss on the air, send us an email. We got our emails down below us here. And feel free to send us any questions you'd like us to talk about. This week we got an email from Joe in Wisconsin, and he would like us to kind of discuss the various differences in prices on bullion coins and really the reasons behind that, and really if one's necessarily better than another. And just to kind of get that started, there's obviously a number of different bullion coins. There's the American Eagle, Canadian Maple Leaf, American Buffalo, Austrian Philharmonic, South African Krugerrand, even some lesser-known ones like the Austrian Corona. And basically, when it comes to the bullion coins, there isn't a remarkable difference between the coins. Usually, the price differences are mostly a result of the various mints that create them and the charges that are applied to those as they release into the market. Mm-hmm. And so really, quite honestly, if there's a difference in price, it's just because we're buying them for less in the market. And specifically in regard to that, much has changed recently, obviously, with availability being much tighter. And the result is that premiums in general have gone higher. For example, the Buffalo is so expensive right now simply because it can't be had. The U.S. Mint isn't making them at all. And in the past, something like a Krugerrand was the least expensive coin because it was predominantly garnered from the secondary market, which meant that all of those original minting costs had actually been absorbed through previous owners. Anything to add?
I think that answers the question pretty effectively.
Right on. Well, thank you very much for watching, and stay in touch with your broker.